Good afternoon, learners. Again, I welcome you to the new session of this subject, and the session name is Introduction to the Stock Market. So, I Priyank Sharma from School of Management Studies, Swami Rama Himalayan University, welcomes you all to this session. In this session, we will talk about the introduction of the stock markets which are actually prevailing in the country, and we will know about these market do and what types of market are here. So, we will go through the basics of the stock markets only in this session. So, how stock market works, who are the actually players or who are the people, companies which are the major players in this particular stock markets. What is the role of technology in the share markets and how trading actually takes place in these types of markets. So, we will talk about these things. So, trading is actually the purchase and sell of a particular shares. So, whether you are a student or an investor or someone simply who have the what we can say interest in the stock markets. So, this session is going to help you out. So, as we know that the stock market is a part of the markets of Indian financial system. So, in Indian financial system stock market is also a market. So, let us start with the topic and let us see what these stock markets plays the role in the economy and why they are required. Okay. So, to begin with the investor, to begin as a student, to begin as a learner in stock markets, there should be a solid foundation required. So, when you are going to begin as an investor, so we should know what are the various types of stock markets in India where we can trade our shares. So, let us start the topic. The stock markets in India are basically categorized into two markets, that is Bombay Stock Exchange and National Stock Exchange. Okay. And actually what are the stock markets? As we know that stock markets are the place where the stocks, debentures, bonds, funds, that is mutual funds, are traded. Okay. So, these markets plays or provides a platform for buying or selling of the security. As far as definition of the stock market is concerned, so we can say that the stock market is a place where the shares are traded or purchased or sold. So, again as definition is concerned, yeah. So, stock market also perform several functions, that is critical functions are price discovery. That is, as we know that price discovery is what? It is the process through which the shareholders or the stock price is determined based upon the demand and supply of that particular share. Second function which is performed by the stock exchanges is again the liquidity, the ease with assets can be converted into cash. So, liquidity is what? Liquidity is conversion into cash of the assets. The third important function is the capital formation, which is done by the stock exchanges. So, the capital formation is what? Capital formation helps the companies to raise fund efficiently. These all functions make the stock market a cornerstone of the modern economies. So, these are the basically functions which are performed by the stock markets. Now, let us come to the participants or the key participants of the stock markets. So, who are the key participants of the stock market? Let us see. So, key participants in the markets are of various types. Now, let us take a look at those key participants, particularly in the stock markets. So, there are participants like brokers, and firstly coming to the brokers and now come to their other participants. And before moving to the brokers, let's first have the retail investors. Retail investor is also a participant. That means the investors like we used to purchase the shares in the markets, those are the retail investors. So, these are the individual investors like you who buy and sell shares in relatively smaller volumes. That means we can't purchase, or people, those who are purchasing the shares in very small quantities, these are the retail investors. Then there are institutional investors also. Institutional investors are what? These includes mutual funds, insurance companies and pension funds that trade in large quantity and often influence stock price due to the size of their trades. So, these are the institutional investors, the investors which invest through the institutions. Next, we have the stock brokers, as I discussed right now. The stock brokers are actually the registered number of brokers which are going to purchase or sell the share, or facilitates the purchase and sell of share in the markets or exchanges like NSE and BSE. They act as intermediaries between the investors and the market. And of course, the next one is market regulators. We discussed different types of market regulators, but as far as share market is concerned, the share market is regulated by the SEBI, that is Security Exchange Board of India. The SEBI ensures that transparency and protects investors' interests and maintains order. We also hear about the terms known as FIIs and FDIs, that is foreign institutional investors, and while DIIs are domestic institutional investors. So, these groups actually plays a major role in dynamics of the stock markets. Which groups? DIIs and FIIs. As we know that they both of them are the institutional investors, so their purchasing and selling will lead to the volume, and it will finally lead to the dynamics in the stock markets. Now, the next component which we should know as far as stock markets is concerned, dematerialization and depositories. So, what is the meaning of dematerialization? It is a very important concept and usually known as demat. So, a very important is transformation in the stock markets was the move from physical share certificates to digital or electronic formats. A process is known as a dematerialization or demat. That means, if you want to convert the physical share certificates into the digital one, the process is known as dematerialization. This means that all your shares are now held electronically in demat accounts, similar to how your money is stored in the bank accounts. That means, when you are converting your shares from physical to demat, it will be displayed in the demat account, as we can see the balances of our account in the demats. Now, depositories. So, what are the depositories? Depositories are the place where these demats are held. There are two depositories in India named as NSDL, that is National Securities Depository Limited, and the another one is CDSL, that is Central Depository Services Limited. So, these are the two depositories which in India, and these depositories and these organizations actually securely hold your shares in digital format. Dematerialization actually has brought speed, convenience and security to trading and eliminating the risks associated with physical share certificates like loss, theft or forgery, which is not possible in case of demat shares. Let us talk about the one more concept of stock market, which is known as stock market intermediaries. So, let us discuss the various types of intermediaries which are prevailing in the stock markets of the country. As we know that there are two stock markets, NSE and BSE. These intermediaries actually helps the investors to take the action in the stock markets. So, we recently talked about the brokers. What are those brokers? Brokers are the people or the companies who facilitate the buy and sell orders for investors. But there is more story to tell. One more thing or one more point which is related to the stock markets is clearing corporations. It is also intermediary. So, these clearing corporations ensures that trades are settled. That is, what does it mean, trades are settled? That means the buyer receives the share and the seller gets the payment. That is what the role of clearing corporations. The next important term is DP, or the one which we can say it is also intermediary. DP is known as depository participants. These are the agents of the depositories like NSDL and CDSL. They actually open and manage demat accounts for investors. Okay. Thereafter, the next intermediary is known as registrars and transfer agents. Normally these are known as RTAs. These RTA handle the records of shareholders for companies. They ensure that corporate actions like bonus issues, dividends and right issues are correctly processed. So, each of these intermediaries which we discussed now plays a crucial role in ensuring the trustworthiness and efficiency of the market. So, these are the basically some intermediaries which play a dominant role in the functioning of the share markets. Now, let us come to the trading mechanism in stock. We knows that, or we talked that the trading takes place in the stock market, trades takes place in the stock market. So, what is the mechanism of this particular trading? So, let us come to one of the most exciting part. So, how does trade takes place, or what we can say how trade actually happens? So, let us see. Most trading today happens online actually. We know that every trade happens online through the fully electronic order driven systems which are actually provided by the exchanges like NSE and BSE. So, trades takes place through the electronic modes or electronic screens, and the orders are take place in these markets. These platforms ensure high speed, transparency and efficiency. So, let us understand a few types of order, that which are the types of order can be given by the investors to these terminals or to these places which can be executed. So, the first one is market order. What is that market order? This order or this type of order executes immediately at the best available prices. That means, what are the prices available of the market in the market of particular share, that will be executed that. It is quick but offers no control over the price. Second type of order can be a limit order. So, what is that limit order? In this type of order, you can specify the price at which you want to buy or sell a particular scrip or a share. The trade will only execute if the market reaches that particular price. That means, if you are putting that I want to buy a particular share at such and such price, so it will take place when the market comes at that particular price of that particular share. Next type of order, which is commonly known as stop loss order. As the word itself suggests, stop loss. So, it is a protective measure. So, you define a price at which your position should be sold to prevent further losses. To understand this, let us have an example. If you bought a share at 500 and you can set a stop loss at 470. That means you buy at 500 and you want to sell it again. So, you can wait till 470 and then you can sell it. So, understanding these orders types is critical for managing your risk as an investor. Now, again some more points in the mechanism of trading in the stock markets. So, let us continuing with the trading mechanism of the stock markets. Let us look at the trading hours, at what time trade starts, at what time trade ends. So, trading hours and settlement cycles in India. First session, which is known as pre-opening session. This runs from 9 am to 9:15 am, and during this times orders can be placed, orders can be modified or orders can be cancelled, but actual trading hasn't occurs over here or hasn't begin over here from 9 to 9:15. As far as normal trading hours are concerned, so these last from 9:15 am to 3:30 pm. That is what the normal trading hours. This is when active buying and selling of the scripts shares takes place. Okay. As far as settlement is concerned, India follows the T+1 settlement cycle, which means transactions are settled or is settled one business day after the trade day, which means if you buy a stock on Monday, so it will be credited to your demat account on Tuesday. One more thing which should be taken into consideration, that next day, that is working day, should be a working day, then only it is going to be credited to the your account. This shortened cycles actually improves liquidity and reduces risk for investors also. It also keeps the country among most efficient stock markets globally in terms of trade settlement. We can say like this. Okay. So, that is what about the settlement cycle, how the trading actually takes place. So, in the summary of this session, we can say like that we talked about the overview of the particular stock markets. So, to wrap up, we can covered or we can say that we have covered the foundational concepts of stock markets in this session, from what they are, that is what the stock markets are, who are the major players or who are the major participants in the stock markets, how trading takes place, and what the investors should take into consideration, what are the depositories, what are the settlement systems, what are the intermediaries in the particular stock markets, and how the trading and settlement system runs the stock market or makes the stock market trading properly, smoothly and conveniently. So, thanks for this all. Thank you for this session. Thank you.